Hope everyone's doing well. Uh, Definitely a more interesting, kind of exciting day for the past 2 days than all over here. This is it's not a lot of fun. It's more difficult. Uh, I'll go ahead and talk about this day first, but first I want to look at crude oil. They released the micros, I believe. I think they're at MCL. Wow. I'd be interested to see if that's accurate. I'm not really sure, but I would not. I probably wouldn't trade the micro crude oil contracts yet. I want to look at the. Yeah, I wouldn't trade it yet. It's July the 12th. This is TradeStation, so it's probably, that's probably not accurate. If I had to guess, I would be interested to see though if the range really did, if that actually happened and there was a. So I don't know if you can see this, but this is important. And this is what I wanted to point out about the micro contracts. Take a look at, and I've got my screen kind of split, so I got to hold it like this. But read you see where it says crude oil at the top, right here. You can see the high was 72.96, the low was 72.06, which is pretty normal for crude oil. The high was 72.92 and the low was 63, so that is more than a small move, to say the least. I would be I would not trade that one bit. To give it some time. Usually, for something that's a micro, and it'll eventually turn into the crude oil, but the normal crude oil, and lots of people will trade it, but it may take a couple days, weeks, months maybe. Probably not months, but coming into the day, overall, let me just do like this. So we spike in channel, we're rallying, and one moment. We had a big gap down, and typically when you see that, you get typically when that happens, you get a small bounce. Where do you buy? You can, but if you do, it's tricky. You probably don't want to use a stop below because 20% chance that this is not the low of the day. 20% chance you've seen the low of the day. But you could probably buy the close and see a little bit of like a bounce up to the high of the bar. And, there you go. Bar 2 disappointing and gapped up. So 3 consecutive bull bars on the 15-minute chart. It's a decent sized bull bar closing on its high. It's an okay buy. Stop below. Betting on at least a second leg up. And, here we went outside up. So, is it a low one? Yeah. Tight channel. Start, getting overlap. So big bull bar, overlap, big bull bar, overlap. So it could be stronger, but it's kind of like this. So you have to wonder, we'll probably get a second leg. So it's clearly always in. Some bulls, probably most bulls bought above this bar. Some would wait for a 50% pullback. So if you think about it, and I really don't want to, let me do it like this. Yeah, there we go. I just wanted to get rid of you. I'm not talking about today, the 14th, so I just wanted to get rid of it for a second. This is what I'm talking about. So if you're looking to buy this bar, on the 15-minute chart, it's bull bar closing on its high. Some traders will buy and then buy more at a 50% pullback. Others will just buy at a 50% pullback. So let's look at that for a second. And that happens all the time. And so if I go to here, and let me mess with the scaling for a second. So here's the day. So big bar closing on its high, below the moving average, and it's obvious we untouched the moving average in several bars, so it's pretty decent buy. Some bulls will buy above and put their stop below. Others will say, nah, I'll buy a 50% pullback. So they put a limit order to 50% and it gets filled right there and they scalp out. I want to see, and again, I wouldn't worry about these little pieces, but they're fun to contemplate. This is a 1 minute chart. So as you can see, here is the first 15 minutes, just as I thought. So right here. So here's the low, here's the high of that 15-minute bar. Trader's going to put a limit order right there, and you can see he went down and a few ticks lower and went up. So the trader's actual risk was really, really small. Anyways, just kind of fun food for thought. Let's go back to the actual day. So again, big bull bar closing on its high, outside up on the second bar. Odds are you haven't seen the low, like the high of the day, so probably going a little bit higher. Low too short. Tight channel. You have to wonder, most traders, it's not closing on its low. It's fairly tight, probably a little more up at least. So most traders will stay long. Others might buy the low and scale a little bit lower. And, right here, what's going on? Well, some traders will, if you watch Al's videos, look back on, I forget, it's around the market cycle videos. I guess it's called trends. And in a small pullback trend, you often get, what traders will do is if you're trading always in, the conservative thing to do is you get out below, let's say, a bear bar, and you get out below and you wait to see what happens. So instead of shorting, you pause and you wait. Well, some traders will get out and say, the bears aren't doing enough. They needed a bear bar closing on its low. 50% of reversals failed. They're not doing enough. I'm just going to get out of my short. And other bulls will say, I'm going to get out. The bulls can't talk right now. The bears are not doing enough. I'm going to buy back. Or I'm going to buy back my long, or a better way to say that is I'm going to go long again and buy, stop down here, and we got a new high. So maybe, we've got an obvious double top, 50-50 chance we get there, probably higher. Maybe trying to form a wedge. So two pushes, 1, 2. You can argue 1, pause 2, pause 3, but not a good shape. 2 is stronger than 1. And here we have 3 pushes, 1, pause 2, pause 3. So now you have to wonder, okay, we went out, we went above yesterday's high. Big sell-off. So lots of traders, I think this is a new all-time high. You'll have a lot of traders just put limit orders at the highs and just say, I don't care if it goes up 10 points higher, I'm going to sell. So a little bit of surprise. Odds are you're going to see probably a little bit more down. But you have to wonder, am I selling at the bottom of a channel, and do I get another leg up? 1, pause, 2, pause, 3. So you could sell here. Not really all that great. I'd rather see what the follow through looks like. And we're pausing. Bulls aren't doing enough, and now we're going outside up. So high 1, high 2, bull bar closing on its high. Maybe traders put a stop down here, and we may test to a new high. And you can see we did. So that happens all the time where, the market is forcing you. A lot of times when the market's forcing you to sell low and it's not strong enough, you can call it a FOMO, if you're missing out. In the opposite way, you see this big bar and it's really strong. It appears strong, and you're thinking, darn, if only this was a bear bar closing on its low, or if it was this is an even great example, but why is this bar forcing me to sell, the midpoint? By the way, I forgot to mention, this is also the same example. So 50%, strong rally, 50% is right there. And you can see traders bought it, scalped out. Again, that happens a lot on several time frames. So you could say that, here's a 20-minute chart. I didn't mean to lose my tangent, but I just wanted to kind of bring it up because it's just, again, it's fun to know and it's fun to think about. Another big bull bar, 20-minute chart. And traders will put a limit order at 50% to buy it. and I think they got filled. I'm not quite sure, but anyways, it's just fun to know it. But going back to what I was talking about, this happens a lot where it's enticing to sell, and you can say, oh my gosh, if I don't get short, we're going to get another big bear bar and I'm going to miss out on a huge trend. I've got to sell now. Failing to realize that it's a trap. It's a sell vacuum, test of support, the highs of this, the low of here. Some traders will sell this high, scale in, and get out of break even. There's all sorts of reasons. And when this starts to happen, the bulls that got out a few ticks below start to say, the bears aren't as strong as they were hoping. I'm going to get long again. And then the bears that were selling up here, or even selling this close, they might say, darn, I'm disappointed. I'm going to get out at the close. And they did. So now we're back to up here. Again, you can buy again above this bar stop down here, because it wasn't enough to make this go up. It wasn't enough to be always in short, and this might have been the second leg down. 4 consecutive bull bars. Again, we're going above the high of yesterday. Traders will do the exact same thing. They're going to say, I don't care. It's a wedge. 1, 2, 3, all-time high. So it's a weird shape, but it still works. It's a double top with a second leg being a wedge. Why can't I? There we go. So you'll have traders kind of do something like that. It's poorly drawn, but whatever, it serves kind of the same purpose. When I'm drawing lines, typically I'll do red, and I try to mimic how Al draws it just for practice. Something like that. So wedge, double top. Strong breakout above a wedge, but again, it's still the same process. Would I sell here? No, I wouldn't. This is pretty strong, and I think that maybe this is a complex wedge. First leg pullback, second leg pullback, third leg, and it could be an endless pullback. So we could go a lot higher than these highs. And, again, it's always in long. First bar below a series of bull bars, so micro channel, odds are it will be bought and will at least go sideways. Bears need to get some selling pressure, and now this is interesting. Now they've got a wedge. So is it 1, pullback 2, pullback 3, second leg, or is it 1, pullback 2, pullback 3? So is it this? And it could be. It could very well just be that. So either way, I know it's at an all-time high, I would get out of longs below this bar. Would I sell? I'm not all that enticed to sell for a few reasons. One, I could always sell lower if we get, we have this bar. If we get this bar and then another big bear bar, I'll sell. And 2 legs down, so 1, 2, 3. It is a wedge, maybe the minimum. 1, pullback 2. So 2-legged pullback, or you could say 1, pullback 2. So this be the wedge. 1, 2, 3. 1, pullback 2. If I'm being confusing, there's a reason for that, and that's because the market's confusing. It's a trading range. And in a trading range, you can draw things all sorts of different ways. I could say this is the wedge, 1, pullback 2, pullback 3, 2-legged pullback down with a nested second leg. I could say it's a failed breakout of a double bottom with a first pullback, pause, second pullback, pause, third pullback. Don't get too caught up in that. What's more important is strong bars, sideways, look to the left. So don't worry too much. And now we have an even further complex wedge. 1, pullback 2, pullback 3. And it's a double bottom. And, do I buy up here? You can, but again, be concerned. It's a tight trading range. And my next thing is we broke above support. We're trying to create a gap. I feel like I can't talk today. And there it is. Are we going to keep the gap open? Maybe. So some traders will buy, stop below, hoping that we'll keep the gap open and that we have some sort of, strong rally, maybe something like that. Probably won't happen, but it could. But it's a lot of risk, and again, middle of a tight trading range. Bears, they see a low, high, lower low, lower high. So, I mean, they see whatever you call it, head and shoulders, top, left shoulder, head, right shoulder, or right shoulder, left shoulder, head, right shoulder. Doesn't matter. They want an endless pullback and some sort of major trend reversal, maybe a wedge, 1, 2, 3, bear breakout below the wedge. Starting to go sideways. And by the way, triangle, 1, 2, 3, very tight. Always have to wonder, you have some traders that know it's an all-time high. They sold here for a scalp. They sold here for a scalp. And, maybe they got out of break even. Who knows? Maybe they didn't sell here because of the strength. There's no telling. But the bulls are trying really hard to create a gap. And if they fail, we could fall pretty quickly and violently. So big bear bar, closing below the past many, many bars. And it's a surprise. You look over here and you're thinking, oh, wow, probably going sideways, probably a little bit down, maybe a little bit up. Then you see this bar, it just looks different compared to the left. Look to the left, It's not a big bear bar. What's the difference between this bar and this bar? Well, there's a lot of things different. Over here, we were in a tight channel. First reversal down is going to fail. Tight channel, first reversal down fails, we rallied. Tight channel, first reversal down is going to fail, we rallied. Here, it could be a complex first leg. Leg 1, pullback, leg 2, first reversal down is going to fail, rally. And ultimately, that's kind of what happened. Leg 1, leg 2 for the first, and pullback, second leg up. So big bar, follow through. Odds are at least a little bit more down. Stop up here. Some bears are going to say it was a double top and want some sort of sell off like that. Others, who knows, maybe pull test of the open. I don't mean to go that fast, but that's why you have to be really quick to get out at a tight trading range at the high. And some of the variables are different on this day. In general, odds are you've seen the low of the day, but at an all-time high, and I really don't want to, let me do this. Try this for a second. I don't want to mess up my screen. Good enough. I wanted to go to a daily chart, but I didn't want to have to change up all the stuff again. But the problem is on a daily chart, this is climactic. So we didn't touch the moving average here. We've gone several days. The odds are we're going to touch the moving average. And this is a gift. I mean, look how, if you really think about it, we haven't touched the moving average since over here. And it's a problem. Let me try to get my bar counter here. If you look at the bar count, it is 34 bars. It's a lot of bars, which increases the chances of sharp sell-off, maybe an outside down, but it's 2 days, so it's possible we go outside down. Anyways, another big bear bar. So 3 consecutive bear bars. Odds are you'll have a second leg down. 4 consecutive bear bars at the open of the day. Is this the low of the day? No, probably not. So traders will sell, stop up here, betting the first reversal up fails, and we'll get more follow through to the downside. Big bull bar. Is it a second leg trap? So first leg, pull back, second leg. It could be double bottom, but when you see something this strong, it's probably not. I mean, if you think about I hate going back and forth so much, but it's really not. It's, arguably, I don't even want to go into that. So some traders will be disappointed here, and, they may get out of longs above, or get out of shorts above and look to sell higher. Others may buy back shorts at the low close, so they buy the close here. This was not a great buy because the body was so big, it's climactic. Kind of like this bar or this bar, but either way, some traders will sell the close and disappointed, set a limit order, get out of longs. Other traders will, it did trigger, so some traders will put a stop above, some traders will put a stop to buy above, doesn't trigger. So for those traders that sold, maybe they get out of longs 1 or 2 ticks above, it doesn't trigger, they're still short, and it keeps selling off. So now You can argue 3 pushes down, it doesn't matter. Climactic, odds are we're going to start to go sideways. Do you buy above? Well, again, same problem as here. You could buy, but you probably need a pretty wide stop. And even if you did buy, you've got the risk of that. So 2 legs up. Leg 1, pull back leg 2, maybe a wedge. It doesn't really matter. Odds are you're going to get a second leg. Now we have a second leg. Strong enough surprise. You could see a little bit more follow through, but instead you got a wedge. 1, 2, 3. And bulls will probably buy above, stop below. Bears probably get out of shorts because this could be exhaustive and will test somewhere up. So consecutive bull bars, traders again, they'll buy 50%. And why is that? Well, they know that 50%'s been working. They wouldn't have gotten filled there, but they might try. Got filled, and boom, they made their 50%. So and the reason why the 50% thing works, it's nothing special. It's a 1-to-1 risk reward. So, and it's a lot better than 1-to-1 because the actual risk. So you strong rally, you try and buy 50% pullback, you barely get filled, and then you sell at the highs. Starting to go sideways, looks like forming some sort of triangle. 1, 2, 3. Some traders, do they sell over here? They certainly can. I mean, this is probably the strongest feature of the day. We're probably not going to go much lower, but we're probably not going to go much higher either. And here again, try to get a new low. Maybe it's a truncated wedge. 1, 2, 3, or 1, 2, 3. Second entry, doesn't matter. Try to form a double bottom. Second entry short, but again, we're just forming a tight channel and inching lower. The traders that are making money are buying new lows and scaling in lower, and they pretty much got all the way in the close. So even down here, and we're rallying. Notice we went maybe a tick or two above the open, so the open of the day was 67.75 and the high was 67.75. And that's pretty much all for today. So, hope this video helps. Thanks for watching.